is June 3rd edition of Backroads of Illinois. We were Central Illinois agriculture source and in the Midwest alongside in Central Illinois agriculture. We were glad you're here. Well, we did see that the grain market for last week took a toll on the markets for last week about the demand is lower from China and other factors. How about Dow Jones was pretty down than previously years, the SPEC from the Federal Reserve. It pretty down than expected with the world economy. I can't complain about the commodity markets along with the weather models, but there are a lot of weeds in water hemp. There is a bad drainage and weeds. It's been swamp in Central Illinois. Our guest today is Joe Camp for Comstock in Bloomington, Illinois. We were going to have a discussion on commodities on a Monday. All right, this is your agricultural news and markets update. Trade deficit is declined for the U.S. with China. Office of the Trade and Relationships. Trade deficit is declined for the U.S. agricultural products for the farmers and ranchers. President Joe Biden put tariffs to China for steel from last month. The Department of Agriculture launched for the voucher for bird flu pilot for dairy farmers in the United States. The H5N1 was affected by the dairy herd and livestock. The Farm Bill have duplicate the pesticides uses. The Republicans will be cutting to the pesticides regulation from the farmers about soybean and corn. Well, the Democrats are opposed by it for cutting pesticides regulation from the Republican version of the Farm Bill. A Tennessee farmer is in custody for fraud in federal crop insurance for his farm in Tennessee. He is paying for $9 billion into the federal crop insurance. This is your commodity markets update on Backroads of Illinois. Corn futures finished in up 2 to 4 cents per bushel. Soybean futures finished in up 2 to 4 cents. Wheat futures finished in up 2 to 3 cents. Now that we are going to talk about the livestock market for today. Cattle futures finished in down 8 to 10 cents per weight. Feeder cattle finished in down 7 to 9 cents per weight. Lean hogs finished in down 8 to 10 cents per weight. West Texas crude oil finished in down 8 to 10 cents per barrel. Dow Jones finished in down 2 points in New York. This is your commodity markets update. We are back with Joe Camp in Bloomington. Stay tuned on Backroads of Illinois. I'm joining with Joe Camp for Comstock. Welcome to the show. How are you?
Thank you. I'm good. I'm excited to talk with you again. I think this is my third time on the show, and we've got a pretty good day going here, except for markets. Obviously, lower grains again to start out the week, to start out the new month. It's been now a 5-session slide lower for the corn and the beans and the wheat, so kind of a tough look for the markets.
I'm sorry for the commodity prices in the earlier on the show. Otherwise, grain market are down for today. Joe, the grain market are down for this morning.
Down here, yeah, again, pretty hard by the close. Thought we had some upside potential with the wheat. We were at one point sharply higher, up about 20 cents overnight, and then reversing lower for the day. It's kind of similar to what we faced last week as well. Quite a bit of negativity out there all of a sudden.
Let's start with our conversation about the planting progress in Illinois and across the Midwest. It's been really wet and stormy. Do you got a chance to see prevent planting for this moment?
I think we do have prevent plant issue as a relatively bigger issue this year. Not necessarily in Illinois, though. There will be some of that likely, maybe slightly more than average. But talking about states like Indiana on into parts of Ohio, we look at in the West. I talked to farmers I know in Northwest Iowa that have really been swamped out. They'll have some prevent plant corn, some other acres that may shift to soybeans. Same with some farmers in South Dakota, North Dakota. It could be that overall we do see extra prevent plant acres this season because of the wet weather, of course, and the delayed plantings to this point of the year. Now that we're past those crop insurance dates, it's going to be something we know more about, of course, by the end of the month in that next acreage report. Until then, we can look at the crop progress numbers like we're just out here this afternoon for planting pace at 91%. Corn is still ahead of the 5-year average nationally, and that was something I think that is getting into this market still. Definitely something that sparked in part the sell-off last week when we came off of the long holiday weekend, that corn and soybean plantings were back ahead of their 5-year averages, started to lean on the market. It's not all that great, late planted corn and what is still a threat to yield potential added to that prevent plant possibility. But for now, it's a lot better also than what we feared it was going to be 5, 6 weeks ago, for sure.
Yes, I saw a lot of weeds and water hemp. Joe, how do you see impacting the export to China from Brazil? What is your sources?
Definitely always going to watch quality. It's for sure early in the season, but we're thinking a lot about exports yet because of the last season and what's left here in terms of carryover stocks from the old crop. There were prospects that we were seeing some bullishness on based on expectations for soybean exports to pick up again, potentially leading into the summer months and particularly to China. Those did not come to fruition. We never had any of those daily sales announcements to suggest that China was a big buyer of soybeans. And now Brazilian soybean prices, in a way, moving back lower to nullify some of that extra price competitiveness that we were looking at. Although, again, a slide like today, we can be back into the mix here. We have been priced well relative to Brazil on corn. Those exports can continue to hold strong here going forward. We've got a daily flash sale this morning to Spain. They've been in the market lately, along with continuing interest from Mexico. They're our top importer of corn again this year, and that strength could remain a feature of this market, a source of support because of what we're talking about lately again, with which is a drought expanding across Mexico. So exports not necessarily where we'd love them, definitely not in terms of business with China, but still a possibility that they could pick up yet before the next crop. And then going forward, a lot's going to depend on politics and outside market issues, factors like the dollar and where it's headed relative to interest rates and all of that.
Yeah, the markets are trading in downward spiral for the commodity markets with outside of the markets. How are things in the economy and inflation, especially since Friday with the SPEC from the Federal Reserve? Could you tell our listeners about it?
Such uncertainty about interest rates and the economy overall. We go back to Friday, as you mentioned. We had the personal consumption expenditure index report. Came out as expected, but still inflation high. The annual rate for the PCE index at 2.7%. That's of course above the 2% target that the Fed would like to see before interest rates are reduced materially. Yet still, the futures market implying better than not odds that we'll have an interest rate reduction, a first one of those by the end of the year. Currently, the September meeting eyed for that first reduction overall. That could be a source of support for the broader commodity markets. If you have the economy still holding up relatively well, but inflation cooling enough that we can get interest rates down, that could take some of the strength out of the dollar. And the dollar is important not just for the general investment interest in the commodity space, but also directly to the terms of trade for our grain and meat exports, for one. So, watching all of that pretty closely and seeing that as a regularly occurring day-to-day influence for sure.
Yes, it is pretty lower than previously years for central demand. The economy is lacking in central demand.
Lagging in a lot of things for sure. And with high inflation, you bring up that stagflation concern, talk about a recession possibly as well. At the end of the day, I think we're holding up strong enough for the economy that we could have a path towards lower interest rates sooner rather than the market fears is later. One thing that'll give us guidance on that will be already again this week, Friday morning.
Today's bird flu and dairy herd and beef herd from H5N1 for right now.
Yeah, that news is still a risk for the market. It popped up in a bigger way again early last week, where we had a spell of higher cattle prices. They were, all higher on the fundamentals at a time when that bird flu news had, for the most part, quieted down. But now talk about cattle, some dairy meat testing positive, a third worker, also a large egg farm in Iowa. All of those headlines were enough to spook the speculators to rush for the exits. These guys, the folks that have been buying up the cattle market over the last month or so, wanting to rush for the exits, not to be the last one out to take profit and get out of the way of the news. And so that's, I think, in a big part, last week's action was based on that. Early this week, today we had some downside early on, but ultimately live cattle finishing firmer. So it gets to a point where you do price in that risk. You do have a clearing of speculative positions, and then a focus returning back to the fundamentals, which in cattle's case are still decidedly bullish here when we look at tight fed cattle supplies, still pretty solid demand. We talk about the economy, but consumers not pushing back in a huge way against higher beef. The higher beef still supporting the cash bid, and this pressing influence of the June live cattle contract now approaching delivery with a discount to the cash trade and some expectation that it can converge higher. That's what I think ultimately helped turn this market around and could still be a source of support going forward.
I think that was other cases in Michigan, right?
Yeah, that's what I picked up. A dairy cattle worker in Michigan, also arrested to workers, of course, that are trying to deal with positive cases on chicken and egg farms around the country.
Is there anything would you like to go to tell our listeners about the acreage report on June 30th from the technical standpoint?
always a huge report because it's not just acreage that comes out then, it's also a quarterly grain stocks update. So you've got the focus not just on the crop ahead, but also what's left over from the last crop and what that says about demand. I think overall we're seeing, because of the delayed plantings, there is the elevated possibility that we've already seen the high water mark for these acreage estimates relative to that March prospective plantings report that we had, which we're basing our numbers on at this point. There can still be a bias towards possibly having some corn acres shift over to soybeans, but I do think we've likely saw the top of that corn number. The cautious part, though, is one that uh, the numbers together, corn and soybeans, were way at the low end of expectations in March. So that could um, still provide some upside, sort of leaning for the market going forward. But I think ultimately, again, because of the delayed plantings, the possibility of elevated prevent plant, we're likely going to see those numbers edge a bit lower here at the end of the month.
It looks shift to corn than beans for this report on June 30th.
You've got that report coming up. And again, it matches with the grain stocks report. That sort of end of the June timeframe is so critical because that report either stokes additional buying interest that can last further into the summer. It can sometimes pair with, of course, weather risk about how the growing season is going along, or it can be the sort of beginning of the end, and it might be past that. Um, because of what we know to be the seasonality of the corn and soybean futures market, where so many times in the past, whether we look at the 5 year, the 15 year, the 30-year time frame, highs most often come in the later June period. And so that
Do
report
you have any
definitely
final
fits it.
thoughts on Brazilian production and world events, and sharing your thoughts on the planting prospective report?
Brazil. So an ongoing issue has been that the USDA estimates have been way above Brazil's CONAB agency and the rest of the trade for that matter. The expectation is that they still got room to drop further. They have certain constraints, one being that they're also still way high relative to everybody else on last year's crop, and that they don't have as much room that they can adjust this year based on their views of demand and what they have thought about exports and internal usage, et cetera. But that's the point of consideration for next week's crop report. It'll be on the 12th. We have our sources like Matthew Cruz, right, the president of Comstock. His family is in Brazil right now, their farming operation, reporting back and still solid on the thought that this last soybean crop was a lot smaller than what's currently still baked into the balance sheet. And also, we get to learn about what's potentially ahead for the safrinha or second crop corn harvest in Brazil as it starts to advance further. The split nature of this year's Brazilian safrinha crop being that there's an early planting period for that crop and some later planted crop. It could foreshadow what we're dealing with here in the U.S. this season, where some of the early yields are favorable enough, but now into the later stuff, as that advances, it's going to be really, really removed from anything that's a so-called good yield because of the water shutting off, the monsoon season ending later in April and earlier than usual, and really putting some stress on that late planted safrinha corn. And so again, that's the risk that we could be potentially dealing with, where there was some early planted corn, and then so much of the second into the second and third week of May was wet, and anything planted beyond that is going to be especially vulnerable to having to have strong finishing weather late in the season, but yet meteorologists keep coming out with these outlooks for the summer that are doubling down on just how hot it's going to be, not just starting here this month later in June, but more particularly into July and even greater temperature divergences from normal to the upside in August. So, yeah, we'll see.
The report is showing pretty bullish from the Department of Agriculture with the Brazil's agricultural agency.
Their numbers, yeah, are continuing to remain much lower. The argument is that Brazil's CONAB is light on the acreage, and that those numbers can still eventually come up. But I think you just let price do the talking or the discovery on what's out there or not. And lately, rising prices for Brazilian soybeans and corn too, for that matter, even with the second crop harvest picking up, it's signaled in a lot of ways that the availability is maybe tighter than what the USDA numbers would suggest, and maybe more in line with where CONAB has been. But yeah, more to say about that next week after the Wednesday crop report for sure.
Thanks, Joe. Thanks to Joe Camp for being in the show. Otherwise, you can subscribe to this episode whenever you got your podcast on Back Roads of Illinois and the Markets Club. Well, folks, there are our show for today on Back Roads of Illinois. Remember that I will be not here for tomorrow's program. However, I will be here on Wednesday. For Back Roads of Illinois, I am Cesar Delgado. Have a great day.